Dobar dan, dragi prijatelji, dobrodošli. Dear Daniel and your team, dear friends, it's a great pleasure to welcome you to the Norwegian residence. You are actually now in Norway. The plot and the house are owned by the Norwegian government. And I think this is the only place in the world where we have a common border with Algeria. My neighbor is the ambassador of Algeria. I really appreciate that you have chosen our residence for this very important seminar. You will have a seminar about the future. It is impressive, if you see here, what Auka has achieved. The achievements have made the daily life easier to us. I don't know how I could survive without my mobile payment and my app in my cell phone. So thank you so much for coming here. I would like to use this opportunity to say some few words about the relations between Croatia and Norway. It is excellent. Our I must admit, it is not. Is no. No, we don't have any outstanding issue. We have to go to the ministry to discuss. It's always very, very nice, and we only have fruitful discussions. Next week, the 3rd of July, the Norwegian Prime Minister will visit Croatia. The first time ever after Croatia got independence that a Norwegian Prime Minister will visit Norway. The Norwegian King was here in 2011, and now the Prime Minister will come. We really appreciate that. We, as you know, as we have discussed a bit earlier today, the number of Norwegian tourists is growing year by year. And I think this year it will be around 300,000 Norwegians visiting Croatia. There will be direct flights from 7 destinations in Oslo, in Norway, not only Oslo. But I would also like to mention that last year, for the first time ever, they started direct flight between Zagreb and Oslo. 3 times a week, Croatia Airlines go to Oslo. And that means that here is a lot of Norwegians also in Zagreb. And I must say that was in high time, because Zagreb has so much beautiful to provide guests. Norway, as you of course know, is not member of the European Union, but we are together with Croatia member of the European Economic Area, consequently the internal market, which make us Norway also one of the European family. I don't know if you have heard about the EEA Norway grants, but that is an agreement Norway, Liechtenstein and Iceland had with the European Commission, and we have to give financial support to 15 European Union members, one of them Croatia. And the purpose of the fund is to broaden the bilateral cooperation and also to decrease the social and economic disparities in the countries. We have just finalized the negotiation with Croatia on a new financial period, and the agreement will be signed during the visit of the Prime Minister. And I only want to mention that one of the programs will be within innovation and business cooperation. So I'm rest assured that in the future we will see even more Norwegian investment and broaden business cooperation between Norway and Croatia. So this is only the beginning. So thank you again, and I wish you all the best for the seminar and also all the best for the mobile payment future in Croatia. Hvala lijepa.
Okay, thank you for that, Astrid. And again, thank you for having us. The next speaker is probably a very familiar face for all of you Croatians, Ivo Spigel, entrepreneur and writer, among other things. So please come up on stage.
Thank you. Good morning. Like I said, there are many familiar faces, so hello to everybody. First of all, thank you, Madam Ambassador, for hosting us in this beautiful home. For this very interesting event. As you say, it's a talk about the future, and we're all very much looking forward to the future and to mobile payments in Croatia. Thank you also to Auka, is that properly pronounced? Yeah. Okay, for organizing the event. And I must say I'm looking forward to listening to the panelists and to finding out more about the company and what you're doing. It's a beautiful morning, we're in these green surroundings, and I'm sure if we all now took a nice stroll down to the center of Zagreb, we would have a problem finding a place in a cafe. Because all of the wonderful cafes in the center and all around town are full. And the reason they're full is because Croatians love to talk. So that is something that we share with our friends from Southern Europe and all around the Mediterranean. The Mediterranean countries are very open and very communicative countries and peoples. And as a consequence of the love for communication and talking, we all love our phones. So everybody in Croatia has the latest model of this or that phone. There are endless discussions on Facebook, whether it's iPhone or Android and which is better, etc., etc. But nevertheless, mobile phones are everywhere, and mobile subscriptions and mobile broadband is very widely distributed in the country and in the market. On the other hand, there's also some not so good news, and that is that if we look at some of the main analysis and indexes that are following the development of the digital economy in the countries, we can see that, for instance, on the digital economy and society, so-called DESI index, Croatia is only 22nd out of 28 member states in Europe. And on the network readiness index, which is compiled by the World Economic Forum, we are for the last indicator, we were 54th out of 139 countries analyzed. And that's not such a good ranking, but even the bigger problem is that this ranking is being all the time the same. We are not progressing. And one of the major things pulling us down there are the indicators, obviously considering the government usage, e-government, and everything surrounding that. So our policy leaders obviously are not doing enough to push the digital economy forward. However, if you look at the individual indicators on those indexes, then you can see that individual usage, consumption, consumers, and citizens are actually pushing those indexes higher. So out of the different indicators, the ones that are usually the best are the ones that are created by the people, by the citizens and by the consumers. And actually, even in some market research that my company did about 2 years ago with one of the big banks here, we could see that actually Croatian citizens and consumers have the same habits as their European friends all around Europe. So statistically, in terms of the mobile phone usage, e-commerce, buying stuff on the internet, etc., we are just as happily and aggressively using the latest technology as our friends in Norway or France or England or Germany. So in the context of Auka and mobile payments, I think that if everything is done properly, you will find very interested and very happy customers amongst Croatians. I would say the aspect of mobile payment that we have now is mobile banking, and it's prevalent throughout Croatia, thanks largely also to Microblink, which is here represented by Izet. So I think coming onto this market, I think Auka will find a very good reception from the consumers. Obviously, it needs to be properly communicated and rolled out and all of that, but you've been doing that, I think, successfully already. So I wish you welcome to our Croatian market. And again, hello and good morning to everyone here. And I'll hand it over to our esteemed panelists, and I'm looking forward to that discussion.
Thank you for that, Ivo, and thank you for setting the scene for this panel discussion. We're just about to start the panel, but before we do, I just want to mention we have closed the doors, so hopefully that will help in terms of the air condition. I'm probably the one struggling the most right now with the heat, but I hope it's going to help. And also, before we start, I just want to tell you a bit about the report that you all found on your chair. because end of last year we actually conducted a survey across a few thousand bankers in Europe, including Croatia, because we wanted their perspective on the PSD2 regulations and the changes in the market as a result of that, as well as their perspective on mobile payments and their plans for the future. And we also asked the respondents how they would define mobile payments. And this is very important for the sake of this panel, because there are probably as many definitions of mobile payments as there are people in this room, but the respondents agreed, or the majority of the respondents said that the way they define mobile payments is a contactless solution facilitated by a phone. So it's similar to Apple Pay, Google Pay, or any of those solutions. Basically a card glued to a phone. But this is obviously not the definition of mobile payments. So the way we define mobile payments, and in the regions where mobile payments has been the most successful, so that is Scandinavia, driven by banks, and China, driven by the tech giants, Alibaba with Alipay and Tencent with WeChat Pay, to mention a few. The definition there is actually a standalone application where you're not dependent on a certain phone or a certain telco. The user is free to use whatever funding source they want, and they can pay with their phone in any scenario to friends and to merchants, both the smaller ones and larger retailers. So this is the definition of mobile payments. And what's also very important to mention is that these propositions has actually helped the scheme owner to earn money. And they actually gone break even just a few years after launching these propositions, because it's actually new payment schemes. And it's a new channel in the competitive landscape that we will see, especially after PSD2. So that's very important for the sake of this panel. This is how we define mobile payments, and this is how mobile payments is defined in the most successful regions. Then what I also wanted to mention from the report, which is specific for your region, which I at least found very interesting, was that in Europe as a whole, most, or about 40% of the respondents are worried that the existing channels, such as mobile banking, internet banking, is not going to withstand the competition from this new type of players as a result of PSD2. But in Croatia, the number was even higher. More than 50% of the respondents don't think that their existing channels is going to make it. So let's see if we can find a solution for that and make you a bit more comfortable in the times ahead. So just without any further ado, I wanted to introduce you to the panelists that we have here today. I'm going to let you introduce yourselves, but I want to start with you, Nicola, yes? Just grab a microphone, and then you guys will have to share on the three. I will keep mine for myself.
Hi everyone, thank you guys for inviting me and hosting me here. I'm Nikola Kaparaljevic. I'm CEO and one of the co-founders of Infinum. We're a small, well, not that small anymore, company in Zagreb doing mobile development. And in this, well, considering this topic, we're mostly working with banks, telecom operators, insurance companies, and stuff like that. And outside Croatia, we're mostly working with startups and some large agencies. Yeah, that's it about me.
Thanks, Nikola. My name is Izet Zdralovic. I'm a co-founder and a board member at Microblink. Actually, it's my pleasure to be here since we, maybe 7 years back, together with Infinum, with one of the banks here in Croatia, we sort of kicked off the mobile payment through mobile banking applications. So we sort of changed the paradigm of the use of mobile applications by simply enabling payment through mobile camera. And in fact, at Microblink, that's what we do. We utilize the camera of a mobile device to do different things to improve the user experience for users. Since then, today we're working with over 60 banks worldwide. They're utilizing different products that we have. We work on SDKs, software development kits that are embedded to enable different processes within banks. So that's what we do, and I'm looking forward actually to this panel.
My name is Dalibor Kurtovic. I'm working for Addiko Group, and I'm responsible for overall transaction banking within the Addiko Group. First of all, thank you very much for the invitation, and thank you to Ms. Ambassador for the nice hospitality here in this very nice environment. Working for the international bank, actually, we are very keen within this new technology which is in front of us. And me personally, I can say that I passed one interesting journey, remembering very long time ago when I receiving support from my parents from Germany, when they sent to me, in that time it was Deutschmarks, it took sometimes 2 months to receive this money from the Germany. Now we are in the front. Now we already have in place one significant feature. It is, for example, SEPA instant payments, where we can receive money within 10 seconds across the Europe, and also other technical opportunity like e-wallet or complete digital banking, which is possible. So I'm very keen in this discussion which is following.
So good morning, everyone. I'm Daniel Döderlein. So I'm the founder and CEO and also a board member of Auka. Very glad to be here. Briefly about my background, so I'm a serial entrepreneur. I've built multiple companies throughout my journey. I started my first business when I was 14. So I've seen all sides of being an entrepreneur, both failing and being quite successful. So this is my longest journey with Auka. As you know from the report, and probably have heard because we spend a decent amount of time trying to inform everyone here about what we're doing, but we're the mobile payments pioneer coming out of the Nordics. So we were the first company to invent and develop mobile payments technology in the Nordics, and we were the first company to launch a mobile payment service in Norway. And our technology has been used by more than 100+ banks, and we're selling this whole platform that we've built end-to-end as a software-as-a-service solution to banks. So in contrast to some of the other panelists, we're not selling components of technology. We're not consultants, but we're selling a proven recipe and a proven technology that you can deploy into your market quite easily because we run everything for you. So that's what we're doing. And we're here to try to talk with you and understand in more detail the Croatian market, and have a conversation on how we can help the Croatian market replicate the success out of the Nordics, because we see that that really gives great benefits, both to the scheme owners, but also to the society as a whole, liberating payments and money and making it easier and more accessible for everyone. Driving business is one very important aspect of this. So I'm really looking forward to sharing this panel with all of you and discussing. And I hope that all of you are also noting down some interesting questions along the way so that you can really do the Q&A and put us on the spot later on. That's me.
Thank you for that, everyone. Yes, just like Daniel said, please take notes, or at least, have some questions in mind, because we will spend the last 10-15 minutes on questions from the audience. And I've heard that Croatians are quite shy, but I hope that's not true for this audience. So just looking forward to the end. Okay, so panelists, I will obviously ask the questions, but please feel free to jump in. We like some heated discussions. And I want to start with you, Iset, and asking, why do you think that mobile payments, the way we define it, hasn't really taken off in Croatia yet?
Well, I think it's actually the mobile payment, as you've defined it, has not picked up because of several reasons. I think the main reason is the fact that we're still in a stage where mobile banking is growing steeply. So people are still picking up on mobile banking. At this stage, talking to some of the banks, I think the usage of mobile banking is higher than the use of desktop banking. So I think we still have the growth in that area, but I sincerely believe that mobile payment, as you've defined it, will pick up, and it should pick up for the sake of the better society and better quality of life overall. So we believe the time will come. The question is when. And from our experience, actually, in several previous projects that were not successful, we tried to do some of the things that we tried to do them too early. So, and I'm hoping that you're not doing them. I think this is the right time with the PSD2 coming up and everything else. I think it is the right time to talk about the potential that you guys can bring to the market.
Thank you for that. So Dalibor, do you agree with this? Do you think your customers are ready for mobile payments the way we define it?
I can say that I'm sure in that. At the moment, in Croatia, it is around 35 of all transactions are from the PI segment are done using mobile banking. Even in my bank is even a little bit more. It is in amount of 40%. So there are missing functionalities behind that. So pure payments also part of them are thanks to the colleagues from the present company who provided actually nice photo pay solution for many banks in Croatia, and it was really boost the mobile payments in Croatia. But younger generation, I'm looking at my sons, for example. They received invitation from the bank. You have to come to the bank to pick up your card, and he said, "Oh, come on, to go to the bank, it's not possible."
Where is it?
So. Also, in same time, having approximately around 600,000 of users of mobile banking in Croatia, I think that critical mass is already here, especially with younger generation, to be able to pick up also all of these new opportunities. Sharing of the payments when they are traveling together, sharing the costs, travel costs, or sharing the dinner or whatever.
Thank you. Okay, so interesting. So we believe that the market is ready for this type of proposition. So, Nicola, who do you think will be, what type of company will be behind this solution, you think? Because obviously banks, telcos, large tech giants, anyone can really launch this type of solution, and especially once PSD2 is in place. So what's your thought on that as a service provider?
If I can just comment on the previous question. I think one of the biggest problems in Croatia is, if you, for example, compare it to China, where mobile payments went through the roof, it's crazy, is because they went straight from cash to mobile payments. They didn't have credit cards and contactless credit cards in between. And I think in Croatia, with the mobile payment, as you define it, you're not solving such a big problem. It's not that big of a problem as it was, for example, in China, where Alipay or WeChat hit off. So I think that's why it's not catching up that fast in Croatia, because it's not that big of a problem. But I think you have something to say, so.
Yeah, obviously I don't agree, but I'll try to articulate it. I'll try to articulate that in an informative and a better way than just saying I don't agree. So. I agree that there was a lot of problems in China that Alipay addressed, which was one of the reasons why they were very successful. We believe that there are many other factors that creates a successful deployment of mobile payments. But then when you look at the Nordics, so let's take Norway as a very specific example. I mean, we can portray Norwegians as spoiled brats. We have all the technology. We have the most efficient banking infrastructure on the face of the planet. So in terms of being very mature, we already have everything. So why did mobile payments reach almost 70% across population adoption in Norway? Then that argument doesn't really work. Right, but then that argument doesn't really work. So the small incremental benefits that you got from these modern mobile payment solutions was enough to even convince the spoiled Norwegians to adopt it. And we're not the statistical outlier because, I mean, we're virtually like our neighbors, the Swedes. It happened there as well. We're virtually like our other neighbors, which is the Danes, and that was actually even higher. The latest number is 82% population-wide adoption. So.
But we're talking about contactless payments made by mobile phone.
No, this is by our definition. So it's your Alipay solution, right? Or whatever Auka could power. So if you try to put that onto the Croatian market, I think there are a lot of the normal indicators, at least our indicators of a potential success is already here. So you can compare it to China and say, yes, there's a fairly large and complex cash economy. That's not a problem, it's an opportunity, right? As proven in China. By digitizing the money, you actually liberate the money and enable people to transact faster and easier. You don't have to be physically near that person to send them money. You do have some P2P solutions, but they're typically inside for every bank. And that is a problem because everyone in the room, you don't choose your friends or your family based on banking relationship, do you? So, as an example, you want to have a mobile phone where you can call anyone. If you can only call inside the network of one operator, mobile phones wouldn't really work. And that's the same thing with payments. You have to be able to easily transact to anyone. And I think that's one of the problems with the mobile banking solutions is that they look beautiful. I've looked at most of them here in Croatia. They're really well implemented. They have nice design. Everything is beautiful, but you've built a wall around it, locking your customers in. And learning from all the other successes, that does not work. It's a fundamental broken principle. It needs to be open for everyone. And I guess that's one of the main factors that could really drive adoption is that the first one that makes that type of service available for everyone is probably going to see that jump.
So it seems like you agree on solving problems. Did you want to comment on that?
I just wanted to confirm Daniel's standpoint. Like we've had one of the leading banks try to do payment, like mobile payment with the largest retailers in Croatia. They switched the service off, I think 2 months ago. I think I was the only user of it. But the fact is that if you do have the walls around the technology and the payment system, it will not be as successful as if it's open to all to use. So I agree on that.
One of those communities is too small.
Yep.
I think
Sure.
I think yes, they are all aware that closed loop solutions don't work, and they actually really tried hard every time they implemented one to make it open. But there are kind of challenging infrastructural problems why they couldn't do it just like that. So, if you are saying that your solution is solving this problem, could you tell more about how does it do that?
Yeah, so I don't want to talk through the whole technology side of Auka. We could do that offline, but I can tell you the sort of principles. So the closed loop systems that you're talking about would be one bank giving their customers one mobile payment solution that works for their customers. That's not going to work. Now, the question is, how can you make it work? And there's two ways. There's collaborating with everyone. Experience shows that that's virtually impossible. Right? So you can imagine those of you representing banks, if you feel that it's hard to innovate and drive change inside your organization, imagine getting all the likes of you in the same room trying to agree on something. It's an impossible task. So how did the Norwegians solve that? Right? And how did the Danes solve that? They solved it by simply doing it themselves. So one bank, they say, I'm going to give the whole market a solution. I'm not going to necessarily brand it as my solution towards my customers. They chose typically a very simple, easy verb as the name of the app, a funny, interesting, target-related word and a name that does not alienate customers of other banks. So the bank brand is actually not really present. And you make it for all of Croatia. You just launch a payment service that everyone can use. You happen to own it. That means that you're making a closed-loop system, but you're making a closed-loop system for all of Croatia. So you're defining a new standard. And that is normally when we talk with banks, that is a very hard concept to understand because you're so intrinsically bound to like Visa, MasterCard, Amex, Union Pay, the established scheme and concepts. But the honest truth is that all of these were established the same way. They were new ideas, and they started to distribute them, and then they later on became a standard. So in the Nordics, what has happened is that they ignored the standard. They just made a new app, and they connected it to bank accounts and or cards, and they made it work for everyone. You just send money to a phone number, or you send money to a merchant number. And there are integrated solutions as well to make it work, but they're ignoring the established standard. They're not spending a lot of time trying to work with Visa, MasterCard. They're not trying to please anyone besides the customers. And that has proven to work very well. So you take a non-standard and you make it a standard by solving problems for everyone in the market. That's the recipe for success that has worked everywhere it has been done.
I hope that answered your question. No? I think your question was more technical, but let's save it for later and we can talk about exactly how it works.
If you guys want, we can share some of the concrete use cases that we've had where we try to do similar things.
Yep.
So unfortunately, the venture that I sort of was part of was electronic invoicing for B2C customers, where we tried to do we tried to solve the problem for all, where we tried to get all the banks on board, and then all the large bill issuers on board to solve the problem for everyone, and to have a win-win-win, and everybody was happy. That was our vision. We sort of worked on that project for 5 years. And unfortunately, we could not get all the banks on the same ship. So that could be an obstacle for you, but I'm sure there are ways to hustle over it. But there's another, I dare to say, cultural thing in Croatia is, like as a technology provider, we often get approached by the banks and they ask us for exclusivity. Like the first thing that we do, like when we present a solution, they're like, okay, we want to do it with you, but let's do it exclusively for us. And most of the time we tell them, no, our idea is to do a good thing for all, to have it spread out, and then they're not happy, but most of the time they still get it from us. So what I'm saying is that there are some psychological barriers that we'll need to break to get to your level, I would say, but I compliment the efforts. I think it makes sense. So, yeah.
Yeah. If I may add, that's something what is missing actually in Croatia. So basic infrastructure, penetration of the smartphones, and users on a high level who are able to use smartphones and who are using already mobile banking. Obviously, there is a missing functionality, especially with merchants, with such kind of possibility to get money, to pay something for small fees, to pay charity, to pay whatever you want, and this is something what is missing. But as Izet said, we are a little bit jealous, one bank on each other, but there are also possible solutions. We have a lot of examples where we succeed in building common solutions through the cooperation using via Croatian Banking Association. And I think that this part of infrastructure should be at least standardized together. Even in our case, maybe not that one bank is offer it and put it on the market, having in mind a different culture here, but I think it is reachable on such way.
Yeah, so I wanted to shed some light on that comment because there are two ways of doing it, and I would like to really try to explain, if you will bear with me in terms of explaining how.
The short version.
That's very hard. Yeah. So first, there's two ways to deploy a system like this, right? So there is doing it alone, and I'll explain why that makes sense. So doing it alone as one vendor, and it's doing it in a collaborative model. And both of them exist, and both of them have been more or less successful. So in Sweden, the banks went together and took a technology like ours, but they decided to bring it to the market in a collaborative model. So they managed to pave the way through all the meetings and come to some sort of agreement. And the benefit is obviously that Sweden has a very successful mobile payment system that everyone is part of. The downfall of that is that the commercial benefit for participating banks is not that great. Because you can imagine if you see a market opportunity to create new and interesting products, if you all agree on the pricing, then you're not competing. Then the competition authorities are going to tell you you're not allowed to agree on pricing. So that means that you're sharing the market amongst yourselves according to whatever market share you have, and there's no room for you to monetize it because the only differentiating factor you have is price. And we know that when the only differentiating factor you have is price, it's a run towards zero. It's been proven throughout history. You're all selling the same thing, and the only competition you have is by price. Then it ends up being a loss. And that's true for the Swedish scheme, is that none of the banks are really making any money on it, and it's lagging behind in terms of innovation because the collaborate does not want to pay for new innovations because they don't get anything back. Right? They've just given the whole population and the merchants a great service, but nobody's making any money. So that's the collaborative model. There are probably ways to construct a collaborative model that might be financially viable. But if it becomes big enough, it's going to become regulated, like we've seen with Visa and MasterCard with the MIF regulation. Now, the other version, which is the most successful one, proven by Venmo in the US, proven by Alipay in China, proven by the schemes in Norway, proven by the schemes in Denmark, is that one just does it on their own. And that's when I want to explain how it really works. We're going to make it very simple. So I have the app on my phone, and I can be a customer of any bank. And I add my card or post PSD2, I connect directly to my bank account. So inside this app, I have my contact list, and you happen to be on my contact list.
No.
So I have my phone.
That's the explanation I wanted.
So I have your phone number.
Now it gets
Took some time to get there, but
But then I don't care if you have the app. I don't care what bank or telco that you're a customer of. I'm just sending you 10 euros because I owe you 10 euros for whatever reason. I bought a bike from you, or we shared a drink yesterday, or whatever. Any normal use case would do. We know this from Norway, that we're using it every day for everything. So I send the money to your phone number, and if you're not part of this, the system will send you a text message to tell you that Daniel just sent you 10 euros for the drink yesterday, so it's contextualized, you know it's coming from me. And if you don't download the app within 3 days and claim your money, the money is returned to me. So what do? And we know the percentage on the conversion, it means that you download the app. Then we have two users. If you're owner of that scheme, you don't know which bank relationship you have, and preferably it would be a bank relationship with one of your competitors, but now I got you as a customer. So it's a customer acquisition play. Then you send money to Lydia on your right-hand side because you owe her some money, then you're two. And when you do that, it spreads like wildfire. You don't care about telco or bank relationship, it just spreads all across the population. And the same function works on the merchant side as well. So normally mobile payments have been very focused towards retail. Right? So the reason for that is because that's where the volume is. So it's very enticing to look at the spreadsheets and say, let's build a business case, let's look at the volume. The problem with that model is that you're not solving any problems. If you can pay with a card at the larger retailers, which you can, then there's no problem to solve, right? Otherwise, the retailer wouldn't exist because they're making decent money and you can pay there. So mobile payments can't initially try to solve that problem. You have to solve other problems. And that's where the NFC story differs very from the successful mobile payment schemes as we define them, because they're ignoring retail. They're taking it later, and I'll get to that, but what they do is that they target from, let's call it the 50% and down part of the market. They're looking at any payment scenario that has a problem. Any payment scenario. It could be a festival, it could be a school charity, it could be a school event, it could be a cantina, it could be your local cantina at your workplace. It could be any of these like awkward cash-driven scenarios that you can solve just as easy as I sent money to you. The merchant can enroll online digitally, and they can join the scheme without having any hardware. They don't need a payment machine. They have a phone. That's
thank you, Daniel. Do we all understand? So I actually want to go back to my original question to you, Nicola. Now that we understand the definition, I think we all understand it now. Good. Do you think that the banks, I mean, you work together with banks and other big financial institutions, do you think that any of the banks in Croatia are ready to do something like this?
Yeah. Well, collaborative model, regarding collaborative model, I think colleague can probably answer that better, but I'm a bit skeptic. Yeah.
So I'll rephrase. Yeah. I mean, you have experience from working together with these type of companies. How do you think they are agile enough to make these kind of bold decisions?
Well, I think the things are changing in the last few years. I think a lot of banks in Croatia kind of figure out a playing ground, and that things are changing much faster than they would probably want them to change. So I think they started thinking about it quite actively, and I think we're going to see some changes in the market in the near future. We'll have to see. Yeah.
Dalibor, do you want to comment on that?
Yeah,
as the bank representative?
Usually banks were quite afraid, for example, out of PSD2 in the very beginning. But I think that this critical mass has been already overwhelmed, and banks are also looking opportunities out of PSD2, but not only out of PSD2. And somehow PSD2 opened our eyes also to more wider solutions. And I can say for my bank that we are looking for some kind of solution, partially by ourselves, but also partially in potential cooperation with fintechs. But not only in Croatia, considering us as an international bank across the region where we are operating as well.
I think the banks realize that with PSD2, coming up through the door. I think that they have to open up, and they're probably, if they don't do something, they're going to become infrastructure. Like it's the same thing that happened to telco operators. They're just going to become an infrastructure, and they need to innovate on top of that and figure out how are they going to position themselves in that market.
I would just, from our perspective, working with the banks is until like 2 or 3 years back, we used to copy paste, meaning that bank A, usually the third largest bank in a certain market, would come out with a solution, then the leaders would follow, and then the rest would follow. Nowadays, through the last year and a half or so, we see more creativity. We see, okay, we do not want to do exactly what the other bank is doing. We want to do it differently. So I do see a lot of potential in there, and that your technology could pick up in that way.
So are you basically seeing a change in how banks actually adhere to new type of technology and competition, that they're actually a bit bolder these days?
Correct. I think they're a bit bolder. They do it in different ways. A few of them are launching new brands. Some of them are going out of the box, like Addiko Bank did. I think they did great transformation, meaning from changing the name to changing the philosophy of the entire bank, where they change everything practically in regards to the transparency and the approach to the end users. Not to mention directly any of the other banks, but some other banks have different strategies of how they want to approach it. But I certainly believe that PSD2 is a great opportunity in that way, and then it should open up a lot of potential.
But how come do you think that Croatian banks have understood that there is actually a new threat out there from tech giants and fintechs and so on, these third parties? Why is Croatia so different? Because this is not the case in many other countries.
Oh, it's quite interesting, actually. First of all, unfortunately, there aren't many Croatian banks. So a lot of, most of the top banks in Croatia are owned by Italians, Austrians, if I'm correct. And some of the innovation and the philosophy, banking philosophy, does come from the outside. However, some of the banks within the groups are the most profitable in Croatia. The leading bank is a good example of that. So I mean, to come back to your question, is sometimes the innovation is driven within the banks and within the market, but sometimes it's coming from the outside. And often we have the copy-paste button, that like they try something in Austria and it worked out, and they tried to copy-paste it to Croatia. Most of the time it does not work. So this is why a customized approach to Croatia is needed, I think.
Yes, Daniel?
Yeah, I think PSD2 is a great example of a piece of legislation that obviously if you're hit by it, it hurts. And it's troublesome, and you have to do technical development, and you have to comply and everything. But then again, it's actually it's a driving force for innovation and thinking differently. and we've seen that, especially then again from the Nordics, trying to share information with the audience about what has happened. So when you look at the Nordic banks, they realized this quite early, and we were advising them on the challenges of PSD2. And then also the opportunities. And what we know is that the mobile payment schemes that was launched was actually a tactical move relative to PSD2, because they were afraid that once they open up everything, somebody else could become the primary interface to their customers. It could be, the GAFAs, it could be a fintech, it could be another bank, right? It could be anyone. And there are a lot of players out there that has high frequency of use already. I mean, you're all using social media, you all use Gmail, you're all on LinkedIn. There's a handful of these services that you use more frequently than you use your mobile banking app. And if the contents of your mobile banking app were to move inside that interface, the frequency of use, the eyeballs, the relationship to the customer would be moved into that channel. And that was what the Nordic banks were afraid of. That's why they launched a mobile payment system, because mobile payment system has much higher frequency of use than the mobile banking app, and it's available for everyone. So they used that, that threat as an opportunity, and they seized that opportunity. And there is a window of opportunity, because you don't have to open up as a bank your APIs until September 2019. And some are moving fast and would like to partner and work with fintechs. Others are holding back. Now, if you choose to launch a mobile payment service and sort of replicate the success out of the Nordics, one of the great benefits is that you don't have to open up your APIs. So you're the one that could saturate the market. And the theory from the Nordic banks was that if I provide my consumers with a really nice service, and also the merchants with a really nice service, and really make an effort to saturate the market, maybe when my APIs are being opened up, and Facebook or whoever arrives in the market, the consumers and the merchant would say, nah, I already have this. I'm satisfied. And that was their strategy. And it seems like it's been working very well. And come PSD2 API openness in September next year, we will see how that actually plays out. But I think they're very well positioned. So I want to share that with you. That was the strategy that they had. They've managed to saturate the market. I think that's a great strategical positioning.
Excuse me, but the PSD2 regulation has been postponed for a second time right now. So I think that the whole idea was, yes, it is.
That's wrong.
We will wait with the questions. We will wait with the questions. So please write them down to be conscious of time.
So I'm afraid that the whole idea of PSD has been already corrupted because, you know, there is a time frame to adjust with regional regulations and everything. And I'm afraid that every country will have a very strict rules for a licensing. I'm afraid that it wouldn't be so open to everybody for small startups. And I'm afraid that here in Croatia there will be a license from a national bank just for 5 or 6 major system integrator.
So wait a second. Dalibor, can you please respond to that first, and then you can comment, Daniel. And that's the last question from the audience for now. So please write your questions down. Later.
brand new information that I got yesterday from the representative of the European Banking Authority. Actually, already 150 TPPs already applied for the licensing across the Europe, and this number is growing from day to day. Already.
Yeah, so I'll try to be very brief, but you're wrong. Sorry. Yeah. So the law part of it is already ratified. So that's irreversible. Which is different with PSD2 versus other pieces of legislation is that the actually technical implementation part of it, the RTS, was not ratified before the law was ratified, but it points to it. Now that was ratified in November, so that means it's final. So that's done. Now the grace period that you're talking about is whenever the banks has to expose their APIs, and that's September 2019. So there is about a year. Let's call it a delay, but that's planned. Now, the only thing that the domestic regulator is allowed to impact in terms of the domestic implementation of the RTS, because the law is given, that's EU law, so you're not allowed to do anything with that. The only element that you're allowed to do domestic changes on is typically then done through the Banking Association, is how you choose to implement the strong customer authentication. Because there are, the reason for that is because there are already strong customer authentication methods around in various countries, and they're trying to drive adoption of a standard. So in the Nordics you have Bank ID, in Estonia you have residence EID solutions, and because they are different in every market, that's the element that you get to do a domestic implementation on. In terms of exposing the APIs, there's no question, there's no interpretation. Everyone has to expose them. Screen scraping is not allowed. There is a small exception that relates to whether or not your APIs are available at a certain level. All the banks that we've been talking to has just, caved in and said, obviously we want to control it through an API. Screen scraping is not an option. So September 2019, this is happening, and you will be fined if you don't open.
If I just can give a little bit more clarity in answering your question, the regulation has been adopted 13th of January this year, and the local regulator needs to transpose that into local regulation, and that's the postponing the law. But the RTSs are from September 2019 in place, and then the big battle will start. And I heard yesterday a nice phrase, after PSD2 world or something like that.
post PSD2 world.
Post-PSD2.
And also the application for PISP and AISP, you don't have to do that in your local country. You can choose to apply with any regulator, assuming your passport. And the actual registration and the listing for this is happening centrally with EBA. So it has nothing to do with the local regulator. So they can be as corrupt and slow-moving as they want. They have to process that request within 3 months. It's a proposal for 2-week cycle for the publishing on the list. And it's going to be central in Europe, run by EBA. So if you apply, you'll get on that list. If you're on that list, you can send a letter to anyone here and you will get access to their APIs. Otherwise, they will be fined.
So I like the engagement level of the audience, and since we are a very agile company and we want to lead by example, I'm going to allow questions from now. So I'm just going to hand you over the microphone so that we get them on tape. So continue raising your hand.
Okay, one pretty hypothetical question. So if we started today with having already stakeholders to start the mobile payment model such as it in Norway or in Denmark, how much time do you suppose we should take to reach 60% usage?
That's a great question. I wish I was a fortune teller. If I was, I wouldn't be sitting here. I would be enjoying like a serene island somewhere with cocktails, winning the lottery multiple times. The only thing that we can give in terms of advice for that would be to look at what has happened elsewhere. We have some really intricate details on the adoption rates for all of the successful schemes, and we'll be more than happy to share them. In general, you can say it takes from 1 to 2 years. Depending on how hard you push and whether or not it's a collaborative model or if it's a single model. The single model historically moves way faster because you have execution power and you take a lot of risks. So when you take a lot of risk, you really do it. If it's a collaborative model, because you have to organize amongst yourself and there's no real economical incentive, that moves slower, proven by the Swedish model. So between 1 and 2 years, you will probably be able to saturate the market if you do it the right way. We have the manual, so you can ask us.
Any other audience questions now when you're allowed? No? Okay. Okay.
If we start talking to them, then they will interrupt.
Yeah. Okay. So I just want to add a question here because it's a bit interesting because it seems like we all agree that Croatia is ready from a sort of consumer perspective, from a bank perspective, legislation. You have digital KYC via microblink, and since banks like to copy, that's good for you because that just means more sales. So I wonder, why do you think that there is no solution that has really taken off yet? And I also wonder, because when I talk to bankers across this region, they always say, yeah, so what did the Norwegian bankers or the Scandinavian bankers do? How did they succeed? I mean, how is this possible? So I guess this is a question directed to you, Daniel. What do you think is different here? What made the Scandinavian banks succeed in the same kind of market as we see here?
Yeah, so there's multiple answers to that question. I think one example, so we were on a panel together with the guys from MobilePay, which was the Danish bank. And they had a very open, classical Scandinavian answer because they were asked exactly the same question. So how did you do it? When did you do it? How did you make that happen? And the honest answer, we just fucking did it. That was the honest thing that he said. We just effing did it. To give a more insightful answer, what we've learned from all the successful banks is that you have to have the stomach to take some risk because it's not easy to win in a market. It's not easy to bring a brand new service from the ground up into a market and educate the market, but the reward is massive. So often you need CEO, board level, executive board member, a team, approval, and a team that really has the interest in creating a change. Sadly, that's typically not normal inside banks. You know, very risk averse, very traditional, we want to sell the same stuff as everyone else, but we obviously want to sell more and wrap it in a nicer way. So this is a fundamental shift in mindset, which is challenging, and I think that's the reason why. And looking at the banks in the Nordics that have done this, they've made those very bold decisions. They said, we might fail. We're doing something that is out of our comfort zone, but we now know that the reward is great, so we will give it everything that we got, and we will, strive for 60% market share. So it takes a lot of guts. It takes a change in mindset and commitment. If you want to try this sort of with a couple of €100,000, the only thing I can guarantee you is you're going to utterly fail. If you put a lot of millions into this, you might succeed if you follow the blueprint, and the reward at the end is massive. And luckily in the Nordics, accounting numbers are public. So I'll be more than happy to point you towards some of the publicly published account numbers from some of these banks. And the Norwegian scheme, the DNB powered scheme in Norway, in the last quarter 2017, they reported net profit, so not revenue or turnaround or whatever, net profit from the VIP scheme of 75 million euros. 75 million euros net profit in 1 quarter from a proprietary mobile payment solution. That's significant.
With 80% of the market.
Not 80, about 65.
Okay, so let's say that a bank or a telco or anyone else decides to do this and make this bold decision and put enough money into it and choose the right platform. And we also discussed what problems to solve. So I want to get back to that. Isa, what do you think, in terms of convincing the consumers and the merchants in this market, what do you think you have to focus on? What segments? What are the consumers in Croatia looking for?
I mean, looking from my own perspective, I would like to have an easy way of purchasing airplane tickets to sending money to my family. You know, so there is a need of such a system. Obviously, all the merchants. I mean, it's always about the rates. It's how much. it's the price level. It's the margins. It's what do we get more than we're getting from the current payment systems, credit cards, and such. But I mean, looking at some of the most successful Croatian e-commerce sites, they've utilized like the multiple channels for payment that they're utilizing. I think there a lot of energy is being wasted in that area as well. So I also see potential there if you could do it through a single interface. So yeah, I mean, I do see potential in it. I'm a bit, I wouldn't say skeptical, but it just, I mean, the fact of the Croatian GDP versus Norway or Sweden is, you guys are ×8, I think, and we're about the same population. So you guys need to have that point in Croatia, and this is a sad piece of the story, but around 350,000 people have their accounts blocked due to the unpaid bills. So those are some reality checks that often us fintechs and people from banks, we forget about it when we talk about the numbers. So I would certainly consider some of the cultural and you know reality facts that we're in when launching the platform, I would say. Yeah.
Want to comment, Oliver?
I think you remind me on something immediately and give me a new idea. Actually, this
there you go.
pool of the blocked people in Croatia. Actually, those people also are having money and dealing with some sort of money, and unfortunately, we have a very efficient forceful collection system in Croatia. But basically, M-Wallet is not covered by the forceful collection law. So they can do it and they can pay with M-Wallet, you know.
This is the right mindset.
So I mean, Dalibor, yeah. Addiko has been brought up as a very innovative bank. So I'm wondering, how do you go about choosing these products to launch and problems to solve and so on? I mean, obviously now we see in real time coming up with a new idea and what to do, but can you please elaborate a bit on that?
Yeah, but I have to admit that our competition is also very innovative. Some of them are sitting here and with very innovative solutions on the market. But our idea is to connect and to enable people within the region where we are dealing, meaning from Austria to Serbia to Slovenia to Montenegro and Bosnia and Herzegovina, to enable them to execute payments actually within a certain ecosystem for low fees, and enabling them to cooperate, to share the costs or whatever. There are a significant portion of the people from Croatia working in Austria, in Germany, in Ireland, and we see also this source of the people as a significant potential for this type of the business. We cannot forget that many of them are still using cash transfers, real cash transfers, using, I don't know, MoneyGram or some other companies, and especially having in mind this new scheme which appeared on at European level, SEPA instant payments. I think that there is a huge potential for all of us, not only for Addiko. And we are looking in that direction. We are still finding, I would say, probably in comparison with some of the fintechs, it doesn't mean that it is Auka or maybe somebody else, maybe on the left side, on the right side, or somewhere else, but we are quite keen into this direction to put something on the market.
Yeah, I had a comment in terms of understanding the Croatian opportunity. And again, obviously, I don't know your market in finite detail, but I had two things that I wanted to cover. One would be some facts, again, from the Nordics or China. So why do merchants on the scheme want to participate? Why are they joining? And we have data on this, so this is quite interesting. Now, what we've learned is that, especially from the 50% and down, so sort of the lower end of the merchant segment, which is quite big in Croatia, also including informal merchants, like so guys selling stuff on the street or on the beach and stuff like that. Now, what we've learned from the Nordics is that when you are a merchant on these systems, you sell more. That's a very interesting statistic. It means that if you are a small merchant and you make a digital presence, and one of the elements of these platforms is also that we call it the marketplace. So if you're a small merchant and you're selling, sausages on the street, you can create a merchant present on the phone of everyone that has the app installed, and they would show up. Now, what are the chances that you would walk by that merchant and purchase something? That is today's purchase scenario. You have to physically visit their store, and you're one of their normal customers, and how you pay doesn't really change that. That's an X number. Now, if you can browse that merchant sitting here, and you know that you're in a hurry, but you would really like some lunch before you go to your next meeting, and you can find that merchant right here, these are interactions and potential purchases that that merchant would never get unless they were on this platform. So it actually drives more revenue. I get hands in the air. How many of you have used Uber? Right. So you're not physically near that taxi when you order it, right? That's a taxi ride that taxi would never get if they use the physical presence concept of getting a taxi. But because you can get it to come to you, you use the app because it's convenient for you, but it happens to also be very convenient for the taxi because they get more rides. That's the concept of mobile payments, exemplified in a way that you all know. The other thing I wanted to mention in terms of creative concepts, since Dalibor started that journey, I've been a tourist in Croatia with my family several times, and I love your country. Now, as a tourist, there is a fundamental problem when you're traveling to a new country, especially when the country is very cash heavy. That means that you have to withdraw cash at an ATM. You are exposed to fees that are hard to understand. You're walking around with a bunch of cash, and you might not feel that secure because you don't know how the country works from a cash perspective. Will I get robbed? Will I lose my cash? What is the right price for these things? And when you leave the country, how much cash do I have left? What do I do with this? What type of foreign exchange am I exposed to when I convert it back? A mobile payment solution could in fact solve that, because there's nothing blocking you for having Europeans using that app. And you introduce it on the airport when they arrive, and you say you can just use this app, and you can pay to all the smaller merchants, and you can even P2P to your taxi driver or whatever, and that would digitize a large portion of your cash economy, and it would give you a closer relationship with these tourists and actually drive more business for all the merchants. So let's also add the opportunity of tourist pay onto the scheme that whoever chooses to launch here in Croatia. I think that's, I would use it as a tourist. I would love that.
Okay, thank you. So before I open up for the formal question round, I want to sort of ask a final question, because at least when I talk to bankers, they are wondering how they are going to gain traction in this mobile wallet, and they are a bit worried about the cost that might be on top of this, and they're also wondering, how am I going to build the consumer and the merchant side? Because without the consumers, there will be no merchants, and vice versa. We've seen the NFC schemes failing completely because banks with their NFC wallets have managed to get a lot of merchants on board, but why would a consumer download an app in a store when they have a contactless card? So this is also a question a bit directed to you, Daniel. How has these schemes gone about in building these, both the consumer side and the merchant side, since it's actually a two-sided market?
Yeah, so I think we covered parts of this already. So on the consumer side, it's obviously driving P2P because it has a viral element. So if everyone in the room receives money from a friend in the right context, you will download the app and start to use it, and then you will spread it forward. So from a marketing perspective, what we've learned in every single market is that you have to educate the market. You have to really explain to people why this is useful, and that costs money. But the moment you reach a certain saturation point, and we know what that saturation point is by numbers, then it will start to spread virally at an extent where it doesn't stop. Because when a certain percentage of your friends are talking about this and they're using it all day long for all the transactions within your family or your group, it's unstoppable. So that's number one. Now on the merchant side, we've covered this already. Experience shows that you have to start with the lower end. You actually have to build this model from the bottom up. You have to solve problems. Looking into a store, there is no problem to solve. You can pay in normal retail stores today. So you start with all of the examples I mentioned earlier, like any festival, any flea markets, any street markets, any street vendors, all that has interactions with tourists, and all of these like odd examples that from a normal acquiring business would be too hard, too expensive to deal with. But they're not in a mobile payment environment because it's self-service. The merchant enrolls themselves digitally. They don't need to get a new piece of hardware shipped out. There's no power issues or receipt printing issues. Everything is digital. And that really drives adoption on the merchant side as well. So looking at those problems and finding them and solving them drives adoption. But it takes a lot of educational activities in the market, and that's not free. But all of the successful ones have done this. And it is an investment, but obviously from the numbers it pays off at the end. So I guess that's my answer.
Would you say, Dalibor, that banks typically have the capabilities in-house to do this from a sort of marketing perspective?
Well, usually banking ITs are sometimes, maybe it's not better not to say that, but sometimes looks like quite archaic. My personal opinion, but also my bank is also looking in that direction, that very often is better to cooperate with other. I wouldn't say buy, but I prefer word cooperate together with certain solutions. We have already such examples with PhotoPay, for example, which is a really excellent example, not only for Addiko Bank, but also for many other banks in Croatia. And if you want to be faster on the market, my personal opinion is better to cooperate with somebody than to develop something inside, having the people which are responsible usually for the core banking systems and so on and so on. Better is to use them for the interfacing with a certain solution which is already developed.
Thank you. Okay. So we are running out of time. So do you have any other questions, the audience? Yes.
Hi, I was wondering, what about security side? I'm afraid for my money, if I lose my mobile phone, phishing schemes, malware, you name it. How about the security?
So I did a webinar the other week, and there's a link on our website that I really encourage you to check out, together with Brett King and one of the guys working in mobile pay. And one of the things that we covered was specifically security. It is a very good question. Now, luckily, the answer is that paying using your mobile phone, not only from a technical perspective, is more secure than the alternatives you have today. I'll be more than happy to spend hours and hours and explain how and why. But also from a usability perspective, it's much easier for you, but you're not giving away security in any way in these systems. So there is a two-factor authentication concept baked into your phone. From a technical perspective, there are soft keys tied to this application. You're not storing any card information, other sensitive information out there in the wild. No personal or sensitive or card information is ever exchanged with any of the merchants. These are just messages of money. The actual processing happens securely on a server side that is certified. So our platform, as just an example, and it probably adheres to or applies to all the other platforms as well, has undergone rigorous security tests. We are actually compliant ourselves with the regulators. We have our own license deliberately to make sure that what we sell is compliant with whatever the banks are expecting. We have external auditors doing the audits on this. And a brief final comment is that when we developed our technology, we were scared about the same thing because we're technologists, we're geeks, and we constructed the best possible solution that we could come up with, not inventing it ourselves, using standard industry components and building a very secure method. And we called one of the professors in Norway, which is very famous because he actually hacked Bank ID, the national ID scheme. And we asked him to kick down the doors, and he was, exhilarated. He was super happy. Yes, normally I don't get asked to do stuff. I have to break in. And he put together a very good research team from his PhD students. We have 12 people. They got access to all our source code, all our APIs. And then after evaluating that for 6 months, they fired up the system, and they tried to penetrate it from the outside. They were utterly unsuccessful, and as a result of that, the professor, the famous professor, is now in our board. So you can rest assured your money is safer than actually dealing with a physical card out there, because that's dangerous.
Thank you.
So as an extension of that, Nicola, as a service provider to this target group, what's your take on security?
I think there are quite good solutions, and as you explained, I don't think we should be that worried about security. I think it's on a really good level, and especially with two-factor authentication, I think you're quite safe. I think Apple is also using that, Google is using that. All the big players are using some kind of 2FA. You shouldn't be worried about that.
So do you think it's more of a mindset and a
absolutely.
worry that is not
and
really
it totally
justified?
differentiates from market to market. For example, if you compare Slovenia, we work there also, compare that with Croatia, they're much more afraid about security issues compared, for example, to Croatian customers.
Does that mean it's more of a communication issue than anything else?
I think so. I think it's more about the education of the customers.
But usually if we are talking about business with regulated payment service providers, it means that service providers are incentivized by the regulator actually, because usually service providers are responsible for every kind of the breach. If something happens to you, actually providers has to pay or to repay to you, unless it is by your deliberately intention, but in this case banks or service providers has to prove this. It is not on you to prove that you are not responsible.
I think that's going to be one of the big questions when PSD2 kicks in. Who's going to be responsible? That's going to be an interesting one to see.
Any other questions from the audience? Yes.
Mario Jurisic from PBZ. In respect of the strong customer authentication, when the transaction is performed by a client using this platform, there is a need for the strong customer authentication. Is that right?
Well, yes and no. So let's talk about now, before PSD2. So the way the system works is that a user downloads the app. The user could be anyone. Now, in order to not introduce speed bumps, making it hard for you to start to use the service and spread it to your friends and family, luckily the EU harmonized regulation for stored value accounts sets some levels on how much money you can store in a system like this before you have to go through KYC. And Visa pushed for that with their gift cards, so stored value limits are 500 euros. Ticket transactions are 250 euros, and total accumulated amount throughout the year is 2,500 euros, meaning that you can operate in the system before you hit any KYC quite long. So there's no speed bumps. Now, in terms of actually KYCing the user, because if you're an issuer of the scheme and a non-bank customer, meaning a customer of your competitor, downloads the app, you have to KYC that user eventually. Now, there are great solutions for this. We have exactly the same as Microblink is providing. So as part of that system, we will do identity paper verification and facial recognition and provide a stored secure element on our system that proves that you've done the identification of the user. So we actually store that on the system, which is your proof that you actually saw the passport and you could validate that this user is this user. So you comply with the KYC requirements on that system. Now, in terms of strong customer authentication, that only applies, authenticating the user over and over again when they use the app, that's built into the system. That's just using your thumb or a PIN code when you log in. So that's the relationship between the user and this system. If you want to charge a bank account, then the strong customer authentication post PSD2 kicks in. Now, first of all, that's not launched yet, so it's very hard to say how that's going to work. Thus, the local implementation of the various strong customer authentication methods. You will have to support that in that system if you want to charge a customer's bank account in another bank. There are 3 main parameters that you need to care about. Number 1 is that the bank that operates the bank account can enforce strong customer authentication for every transaction for certain reasons. If they believe it's fraud, they can. Now, if they don't believe it's fraud and if it's under certain amounts, they're not allowed to enforce for every transaction. You can report them to the regulator and they have to lower their threshold for forcing strong customer authentication. The other thing is recurring payments. If you sign a recurring payment deal, you can use strong customer authentication and approve one time, and you can, as a scheme owner, continue to charge the bank account without repeated strong customer authentication inside that agreement. So that could work if you want to top up the wallet from another bank's bank accounts. You could do that through these recurring payment options. And the third option, which is the most desirable and sneaky way of doing it, is that you do trusted beneficiary. So in the RTS, it's defined that you cannot enforce strong customer authentication for transactions executed by a payment provider, which the consumer has listed as their trusted beneficiary. So if it means that if the wallet is listed by you to your bank as a trusted beneficiary, the wallet can execute payments on your account without any strong customer authentication following the first one, which means that you have open access and you can do whatever you want.
Thank you. Now you don't need to read the RTS. Do you have any comments to this, Iset? This is your turf. Or more questions from the audience? Oh yeah, that's fine.
I'm not want to be a spoiler, but this is a challenge in respect of the user experience, which will finally be a result of usage of the application in the end is spreading like fire. Just a remark regarding this choice of beneficiary. Is it a choice of the client or is it a choice of the institution which is ultimate issuer or owner of the account?
So it's the choice of the user. And the bank that runs the account cannot make it cumbersome for the user to add recipients of money as trusted beneficiaries. Just one more comment is that all the success of all the schemes that we've seen so far has not been subject to this challenge. So it means that all the success that we've already seen is not related to PSD2 at all. So you don't need to sit and wait for PSD2 to become potentially a trouble. It's actually an additional opportunity. Yes, there might be some speed bumps, but all the successes that has happened up until now hasn't even had that opportunity. They're all built in the current world. So the opportunity is much, much alive, and it's even going to get better post PSD2, but there might be some speed bumps.
Thank you. Okay, so we are over time. If you have more questions, please ask the panelists after we're done here. I want to thank everyone so much. I'm going to give you some gifts, but I also just want to summarize. So it seems like the market is ready. The infrastructure is in place, thanks to some people in the audience. The consumers seem ready, the merchants seem ready. So it's going to be very exciting to see who takes the market, if it's a bank or if it's a tech giant or whomever. So thank you all to the audience, and thank you to Ambassador, to Ivo, to everyone. So please enjoy some more mingling, coffee, snacks, and thank you panelists. So give them a big round of applause.